This is your Monex Metals Market Update with Mike Maroney.
Good afternoon. It's Monday, February 5th. My name is Mike Maroney, and I am coming to you today from the Monex Precious Metals Studio. Let's do our week in preview. If you look back at what took place last week, as the Fed insinuated that we would see 3 to 4 additional rate increases, many people thought that when that announcement was made, the dollar would bounce back quickly after falling precipitously throughout the year from a high in the index of 103.80 all the way down into the low 88 area. And if you think about that, that was a 15% drop in the purchasing power and the value of the US dollar. It's interesting because a lot of people look at money and say the US dollar is a dollar. But the dollar is really a share of stock in the United States. And it's represented not only by the debt and the fiscal austerity of our government, but it's also represented by the number of dollars that exist throughout the world and the overall perception of what the world thinks about the future of the United States. It was very interesting. Back in 1971, when Nixon inevitably closed the gold window and the dollar became a fiat currency, the Secretary of the Treasury, John Connolly, stated that the US dollar is our currency and the rest of the world's problem. Now, why would he say that? Well, he said that because for years and years, ever since 1944 and the Bretton Woods Agreement, the world utilized the dollar as a store of wealth. But suddenly, the US was closing the gold window, and central banks around the world were no longer able to take $35 and exchange them for an ounce of gold. Now the US dollar was a free-floating currency. And all of those dollars that had been accumulated for decades were suddenly worth a little bit less because they didn't have any backing. But lo and behold, the United States was able to pull out of that situation after gold rallied from $35 in 1971 all the way to a high of $800 in 1979, 1980. And after that period, we went into a bit of a bear market because inevitably we saw a major increase in interest rates and the dollar popped all the way back up to 122, which we hit in the early 2000s. But we had 9/11, we had a war on terror, we had a massive increase in debt, and now the United States is sitting on $20 trillion plus in debt and trillions of unfunded liabilities. We had a very interesting event take place in a little town called Cranston, Rhode Island. And that's where they were having issues with the pension plans of firemen and police and some other workers. And inevitably, they took it to court. And in the First Circuit Court, it was decided that government could retroactively go back and change the benefits of these pension programs because, quite frankly, you just can't bankrupt the government based on the fact that they made promises they couldn't keep. Now, this event wasn't talked about very much, but over the next few months, it may send a bit of a shockwave through the pension programs and the overall retirement programs of many government workers. But what is the bottom line? The bottom line is the US dollar was the supreme currency from the 1940s all the way through the mid-2010, 2011 era. And now many people are questioning whether we are on the brink of a major sea change. And what does that mean? It means that the overall perception of the world is starting to change, and the US dollar is no longer as good as gold, like it was said at one time, and is losing some of its respect. And the value of that dollar that you look at in your wallet has lost 15% in the last year. And what many people are doing right now is looking at that dollar and saying this is currency, but there's other places that this dollar may be better able to serve me if I rotate it out of cash and into other investments. The stock market, when the S&P bottomed at 666 and the Dow was as low as 8,000, was a tremendous place to convert dollars into shares. And sure enough, we saw the stock market make new all-time historic highs 71 times last year. But now the stock market looks like it's getting a little toppy and it's starting to sell off. It looks like interest rates are coming up, so maybe real estate prices could be coming down, because in this video series I have talked many times about the fact that people don't buy price, they buy payment, and when interest rates go higher, payments go higher. So real estate could also be topping. Where should you park your dollar? Obviously, when John Connolly said it's the rest of the world's problem, he knew that all around the world, people held on to dollars for a store of value. Well, guess what? Today, it's our problem, the US dollar. What can we do to potentially diversify to protect ourselves if the fiscal austerity situation continues to run on course the way it has for the last 20 years, and we continue to add $750 billion to $1 trillion plus dollars of debt each and every year, and that dollar continues to sink? What happens if the rest of the world decides enough is enough? Where would your dollars be better parked as far as a store of value? Many people believe precious metals could be one of the better choices as far as a store of value is concerned. And we believe if you give us a call here at Monex, we can explain the circumstances that exist today that, quite frankly, may make you understand a little bit better why diversification has always been a quality strategy as far as individuals' portfolios are concerned. Obviously, precious metals go up and precious metals go down. We had a high in silver of almost 50 in 2011, and we had a high of 1929 in gold in 2011. And we've just gone through a major corrective move back to the downside. Now the precious metals may be that undervalued sector that makes a tremendous amount of sense as far as the long term is concerned. But that'll be up to you. So give us a call so we can explain to you and answer any questions you may have as far as why gold and silver might make sense for your portfolio. Thank you.